Hey everyone, welcome back to Corporate Decoder. Today, Ready Capital Corporation RC just filed an 8K detailing their annual shareholder meeting results, and I'm seeing a few interesting takeaways about how their investors are feeling. Quick note, this is not financial advice, just my take on public filings for educational purposes. While most votes went as expected, there are some subtle signals in how the votes were cast that tell a story. This filing is an 8K, which is a report for significant events that shareholders should know about. In this case, it is about the company's annual meeting on the 17th of July 2026. The company presented several proposals to its shareholders, and we're seeing the voting results for each. The filing itself was made a few days later on the 23rd of July 2026, which is pretty standard for reporting these kinds of results. Ready Capital Corporation is a real estate investment trust, or REIT, that focuses on lending. Let's dive into the voting results. The company asked shareholders to vote on electing directors, ratifying their auditor, approving executive compensation, and approving an equity incentive plan. It is important to remember that these votes reflect the sentiment of the shareholders, and the numbers can tell us a lot about confidence in the company's leadership and strategy. First up, the election of directors. Shareholders voted to elect all 7 director nominees. On the surface, this looks like a strong endorsement of the current board. Looking at the individual directors, Thomas E. Capasse received a significant number of votes for, at 69,106,213. However, there were also 4,787,591 votes withheld. This gap, even with a strong majority voting for, is something to note. It means a portion of shareholders are expressing some reservations, even if not enough to vote against. Across all director votes, a consistent block of 34,899,114. Broker non-votes appears. These are shares held by brokers for clients where the broker did not receive voting instructions. This is a substantial number of shares that were essentially not directly cast by beneficial owners on these specific director votes. There is a slight outlier here with J. Mitchell Reese, who received fewer votes for, at 55,466,075, and a higher number of votes withheld at 18,427,29 compared to the other directors. While still elected, this suggests a slightly weaker mandate for this particular director from a portion of the voting shareholders. This kind of variation is common as shareholders may have different views on individual directors based on their background or perceived performance. Next, the company sought to ratify the appointment of Deloitte and Touch LLP as their independent auditor for the 2026 fiscal year. This is a pretty standard vote at annual meetings, and it generally passes with overwhelming support. And that was certainly the case here, with a massive 105,104,898 total votes for. This indicates strong confidence in the company's accounting and auditing processes. There were only 3,167,136 total votes against, which is a very small number relative to the total votes cast. Abstentions and broken non-votes were also minimal on this proposal, showing broad agreement on the choice of auditor. This is a positive sign for corporate governance. Moving on to Proposal 3, the advisory vote on executive compensation. This is often called a say on pay vote. While it is not binding, it gives shareholders a chance to voice their opinion on how the top executives are being paid. Here we see 64,840,514 total votes for the compensation package. This is a majority, which is good for the company. However, there were 8,349,898 total votes against. This is a more significant number of votes against executive pay compared to the auditor ratification. It suggests that while the majority approved, a notable chunk of shareholders felt the compensation wasn't fully justified. And again, we see that consistent 34,899,114 broken non-votes impacting this proposal as well. This is a large block of shares that didn't directly participate in the vote. Finally, Proposal 4 was about approving and adopting the amended and restated Ready Capital Corporation 2023 Equity Incentive Plan. These plans are used to give stock and other equity awards to employees and executives, which is a common way to incentivize them to perform well and stay with the company. This proposal received 68,412,042 total votes for, indicating shareholder support for the company's equity incentive program. There were 4,841,021 total votes against. This is a number that is relatively in line with the votes withheld, seen in the director elections, suggesting some shareholders may be cautious about equity dilution or the specifics of the plan. The number of abstentions at 640,741 is also relatively low. And again, we have that large block of 34,899,114 broken non-votes. Overall, the results show that Ready Capital Corporation's shareholders generally support the company's direction and leadership. With strong ratification for the auditor and the equity plan, the director elections passed, though there was some variation in support for individual nominees and a consistent number of withheld votes. The advisory vote on executive compensation also passed, but with a more significant percentage of opposition, which is something the company's leadership will want to pay attention to. The consistent large number of broken non-votes means that a significant portion of shares weren't directly voted by their beneficial owners on these matters, which is quite common but also means the reported majority support comes from a smaller, more engaged subset of shareholders. The core story here is one of general approval, but with subtle signals of shareholder scrutiny, particularly around executive pay and some individual director support. It is not a red flag event by any means, but it is enough to suggest that management should remain attentive to shareholder sentiment, especially as they navigate the current economic landscape for mortgage REITs. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video, subscribe for more insights, and join our Discord community linked in the description.